Good morning, good afternoon, and good evening to those of you around the world. Welcome to the daily Trade the Chain crypto update, where we give you everything you need to know for the next 24 hours and hopefully the next few days. Today is Friday, January 27th, and we are tailing at the end of the week. Remember, we have had a few, or each weekend since the start of the year, we've had pumps for the crypto market as soon as the equities market closed up shop. So I'm sure many are expecting that, but we of course have the DXY, around the same level as when we spoke yesterday, which is a bit of a change in pace. And we also have FOMC meeting, the next FOMC meeting on Wednesday, in which they are likely to announce a 25 basis point hike in the federal funds rate. So we have a couple of interesting scenarios in front of us. Do we continue bullish throughout the weekend and then sell off into next week? Do we start front running a potential sell off? Do we just range into next week? There's a lot of possibilities in relation to price action as we approach the weekend. So let's go ahead and dive in and figure out what's going on. No real material change in DXY. When we spoke yesterday, we were right around this level right here. We are just above it after, really surviving that level throughout the day. Of course, 102.1 is, seems to be resistance. We got some flat candles there. Typically, when you see flat candles, they end up getting retested, although, a bit of a tweezer, kind of still flat. Retested these, they closed flat. Typically, you expect that to get retested. We are on the 4-hour chart, and a retest and then a rejection would not be bearish for equities. But if you broke above this and started creeping back up into some of the highs from last week, then you start to potentially get in the scenario of, is risk under risk under risk? Do you want to trade risk markets if DXY is starting to poke higher? The answer is typically no, but it is worth keeping an eye on depending on what happens in equities and crypto. So no real material change. I'm still expecting likely a tap on 101.2, but as we start to ease out and as we saw previously, the more we flatten, the more likely it is to have found support and then rise in the future. So always, keep your eye on this if you're entering any swing trades or any trades that you think may last longer than several hours. So looking at equities, you can see what we drew for the Trade the Chain community this morning. PCE came in right as expected. So obviously we had our natural volatility around PCE, shot up, shot down, now moving higher. So basically, if you can, my magic number for the Trade the Chain community this morning was about 40.60, just due to the where we closed on Thursday, and of course where our resistance was this morning. So we closed above that. I think we have a good chance of getting to 40.10 as long as we don't close with any tweezer tops on the 1 hour. If you get to 110, probably will start coming off a little bit. But if you end up, closing with those tweezers, you start closing beneath 40.70, which is the previous close, and get back to that 40.60 level, you may end up tagging 40.40 again, which was our support over last night. You lose 40.40, you're probably back down to 40.15 or 4K. But right now, things look more positive than not. We, of course, still have 50 minutes in this hourly. So although it looks ugly, there's still a lot of time for this to improve. So ideally, I want to see a close above 40.70 for this hourly, and I still think 40.10 is in play. Close below 40.70, we see how 40.60 reacts. We lose 40.60, we're at 40.40. We hold 40.40, you're back up to, breaking above 40.70 and getting up to 40.10. But no reason to worry yet unless we close below 40.70 for this move. Looking at Bitcoin in comparison to equities, if equities continue to rise, I would expect Bitcoin to do the same. We are now above the previous daily close. That is now our support moving forward. We're also above the VWAP, which was a very important indicator for previous pump and for continuation that we mentioned yesterday. So if we can stay above the previous daily close, you can get up to 23.3. You get above 23.3, you're at the recent highs of 23.8, maybe 24K. And of course, if you lose the daily open and the VWAP, very similar to what we saw yesterday, you are trickling back down in this demand zone around 23 25 all the way up to 22, or I'm sorry, 22.25 all the way up to 22.5. So this demand zone is held strong. 3 taps, closed above it. We are now moving towards the top end of the range. So I would expect, probably tag 23, 3.5, soon-ish. And then, if we can get above that and confirm it, then you're, trickling back up to 24. But remember, we do have this high at 23.8, which could create a double top or create more resistance if we end up getting to that level. Looking at Ethereum, very similar, but, just to note, Ethereum versus Bitcoin has been very weak. It is trying to recover in the demand zone. I've mentioned this yesterday. We do want to see a daily close above 0.069. That would be very positive for Ethereum strength moving forward compared to Bitcoin. And Ethereum, very beautiful daily candle right here. Strong SFP below the range, back up into the top range. So looking back at the hourly, we're now above the VWAP. We're now above 1600, which is both the previous daily close and coincides with the resistance. So a lot of confluence for resistance and support right now, and it is acting as support because we just broke above it where it was previously resistant. So close above here, you're probably back up to this POC around 1630, maybe as high as 1650. Of course, the recent highs were 1680, so be very careful around that level. That could be potentially a double top, or maybe it comes off the highs back to the previous daily close, or even the POC. So very mindful of that. If we lose 1595, 1600, then you're probably back down to recent lows of 1545, 1540. And then if you lose that, you're probably back down to 1500. Of course, equities and Bitcoin do look pretty solid. ETH versus Bitcoin seems to want to be recovering. So if we get that ETH BTC close above 0.69 or 0.069, my apologies, then ETH may start outperforming Bitcoin on kind of the next cycle. I'm not saying that's yet, but it does seem more likely than not, given where we are at in the ETH to Bitcoin range. This is, if you are a range trader, this is a blessing. Support 0.69, tweezer, swing failure pattern into the demand zone and then move higher. Of course, no real candle bodies lower than 0.688. So looking very good. Close above those candle bodies. Definitely looks like a nice range play. And just to demonstrate that further for you, this is your range low. This is your demand zone because of where we traded in here. And then this is your range high. And if you survive here, then you are back up here. That is let's see how big of a trade that is. That's a 10% trade. So you long ETH, you short Bitcoin, you make money on the difference. And it should be about 10% if you traded it trough to peak. So not a bad trade, but definitely wait for confirmation on that trade, as that's not anything I'm diving into right now. So back to the hourly on ETH. Survive the VWAP, survive the confluence of the VWAP supports and previous daily close, move higher, lose it, move lower. Looking at the U.S. economic calendar, of course, PCE was directly in line with expectations, 0.3% month over month, 4.4% year over year for core. And then next week, the big number is going to be the federal funds rate. So no news on Monday. So it should be, pretty regular chill day. And then we have, a few, home price index and consumer confidence index, which will likely give some sort of indication, but or some indication for price action prior to the Fed announcement. But we know that 2 p.m. federal funds rate comes out. It's expected to be, around 25 basis points. And I think, of course, given that expectation, we're obviously going to see volatility around that. Typically, price will reverse that volatility and continue, and typically, let's say, price moves higher on the federal funds rate announcement at 2 p.m. 30 minutes later, Jerome Powell starts talking. Then we start selling off and have some sort of black swan. That's what we've seen a lot. What that indicates is that the guidance is almost more important than the announcement. The announcement's kind of expected. It's kind of priced in. The guidance is what's going to happen next. What is the Fed outlook? How are they feeling? What potential actions may they take based on their feelings? That's really what the market's going to be looking for after the federal funds rate. Federal funds rate volatility, interesting price action, Jerome Powell speaks. That's when the market really makes its momentum move. So keep that in mind moving into next week. We'll, of course, discuss that on Monday and Tuesday. So good luck. Happy trading. Every weekend since the start of the year has been bullish. The market will condition you to get used to trends and make you think that they're making it easy on you. Occasionally they do. Typically, more often than not, that trend will eventually decay and something else will occur at that time point in which you expect the trend to continue. That's what happens with trading. Nothing is 100%. Nothing continues forever. So just be careful with that. Is that we've had things do look bullish. There's still a bullish narrative with positive, economic data right now. But at the end of the day, the market will condition you to expect things through patterns that will not always happen the next time around. And it is something to be cognizant of. So perhaps you reduce your risk. Perhaps you don't take as many trades. Maybe you double your risk because you are betting on, contrarian outlook. I'm not entirely sure. We'll be sizing down and relaxing a little bit heading into FOMC. It's been a fantastic January so far. But if you do choose to take that risk, make sure you are safe and thinking about all ends of the trade rather than just the euphoric one. So good luck, happy trading. And if you're not in the Trade the Chain community, go ahead and get signed up at tradethechain.com for a 14-day free trial. We also have a bunch of new data upgrades coming and should be a bunch of fun stuff going on with all the power of Trade the Chain, the tools, as well as the community. So talk to everybody on Monday.